Hello, I'm Joe Camp with Comstock Investments. Thanks to the Kansas Soybean Commission for this invitation to talk about a market outlook for soybeans 2022. You see our disclaimer at Comstock Investments. We're a brokerage firm and futures trading involves risk. We're going to talk about futures trading and some implications for prices following this upcoming harvest 2022. South America will come into play as we talk about global supply and U.S. demand competition. We look ahead into spring 2023 and then again wrap up about some recommendations on marketing strategy. We'll begin with a look at the USDA's current estimates for soybean yields as of August. These will change as we head into the season, but the current expectation is for nationally a strong soybean crop, one that would be 51.9 bushels an acre across the country, leaning on a record national average yield in Illinois at 66 bushels an acre. Comstock does have an office in Illinois. We also have offices in Missouri, Iowa, our home office, in South Dakota, now in Minnesota, and also in Kansas. So Garden City, Kansas, we do have some boots on the ground. They're with you, working with farmers, and at this moment, trying to figure out what's ahead, of course, as we lead into the fall harvest season, but also into these next USDA crop reports where, again, these numbers can change. The bias for corn has been that yields should come down from the earliest estimates. And for soybeans, while there is still potential to finish out the season in a lot of parts of the country, there is a rough consensus forming that the current yield estimates could also be too high on the soy front too. Would that be the case for Kansas? You can tell me certainly 40 bushels per acre is estimated up 1.3% from last year, but do you have the same crop as last year, or in this sense, a little bit better? Here were the 2021 soybean yields by county in Kansas. You can look this up on the USDA NASS Statistics Service website. And we can see, of course, mixed results depending on where in the state, but ultimately reporting that this year we've got that similar potential. Does the drought monitor, as shown here, suggest the same? Of course, worse conditions in a lot of parts of the southwest corner of the state, but broadly speaking, drier in many areas, as reported by a lot of our farmer customers, and generally with the condition ratings such that they have been all season. It does come as a surprise that we saw the early estimates for Kansas, at least on a statewide level, being up from 2021. Now, when we get into talking about what we should expect for prices ahead, it has to be done with the caveat of there likely being increased volatility in this market to stay. At least in the foreseeable future, we've been observing bigger price changes and prices that can shift very quickly based off of news that might not be perceived as absolutely core to the grain market. For example, yield estimates and export demand, as we'll talk about. If the market is worried, as we have been, about recession, about the possibility for, say, so-called black swan events to pop up, we are going to see that we can have higher downside volatility potentially get in the way of what our outlook is for, which are generally higher agricultural prices leading into the next year ahead, 2023. This comes on a number of things, but particular to the soybeans, we're talking about stocks being up on the year just slightly, but still remaining tight at well under 300 million bushels, now dependent on yield and acreage changes that are possible ahead. Demand too can be adjusted, but right now there isn't any real sign we should be worried about the usage end of the balance sheet, given how optimistic we are about what's ahead still for soy processing margins and also for export demand. 2022 coming off another record year where we saw almost an insatiable appetite still from China. And that's been a positive sign because we have had these back and forth tensions developing again trade-wise with our top agricultural buyer in China. The general outlook is for yields to have that potential to come down just slightly, even starting at a high level nationally, that can tighten up the crop even further into these future reports in a way that's realized into higher prices market-wise. But we will get into harvest pressure. We're going to again require on meal and oil demand remaining bullish, keeping those processing margins up so that basis can stay historically strong. Now, it's not strong everywhere. Of course, we know about the differences regionally, but we're going to talk about what's ahead in terms of the long-term outlook being very positive, namely with fuel processing demand and that capacity for renewable diesel rising sharply over the next 4 or 5 years. So to get into that just a bit, something we've been talking about is renewable diesel overtaking biodiesel, renewable diesel being a up to 100% blendable fuel source. And based off of soy oil inputs, we see crush capacity and facilities popping up in a big way that can also help draw into higher basis values down the road for Kansas soybean farmers. So all in all, I can paint a bullish fundamental picture, but again, I talk about the fundamentals relative to cash market supply and demand. Supply remaining on a tightening trend for soybeans, and demand still solid. The question will be, do we have these negative outside market influences? Because soy is definitely sensitive to these black swan type events, like something that would trigger another trade war with China, for example, these tensions over Taiwan being watched closely. We're also seeing links to outside markets, of course, like oil. If we talk about bullish processing demand, we need to count on there being not a huge fallout from different political ongoings around the world, like, for example, the Iranian nuclear deal that was being talked up as revamped here lately. So those are on the radar for sure. And that's why the title of this slide could fit with the general outlook on markets, which is to call for higher prices and to expect them, but to also respect there can be higher volatility to get in our way. That leaves potential for hedging opportunities, as we'll talk about to wrap up in the recommendation section. First, to talk about what's ahead seasonally, this is a depiction of the future seasonal for more research on November soybeans. We see the current price in black relative to the 15-year pattern on the main chart in blue. Down below, also the 15-year pattern with the 5 and 30 years. We see that during the summer months, as we feel comfortable with planning, usually some price pressure, and then possible again as we get into the early part of harvest, usually because farmers are heavier sellers of soy relative to other crops like corn, most notably at the early stages of the fall. After that's done, like last year, potentially in November, we can see a price bottom and for demand to kick in as a driver of higher futures prices. And that generally is the expectation for us again this year, that we can see some pressure leading up to or into the early part of harvest, but then demand will prove itself into firm cash prices and eventually higher again futures prices. That would lead to, say, recommendations, as we'll get into, of making sales, but then having exposure to the upside in terms of reownership hedges. One thing that can come into play after we've harvested this crop is a realization of what's there or not in South America. Spring is here for the Southern Hemisphere. We're looking at Brazil, farmers there, and in Argentina, planting soybean crops at this point. It'll move further north as there are moratoriums that disallow planting before a certain date because of different disease pressures, most notably. But it's here. Planting season in the Southern Hemisphere has started. This under the expectation that Brazil soy acreage will be up almost 5% this year. And with record yields, that's a big crop that's already penciled into the balance sheet. It's a negative in a way for now, but it can become a positive if, unfortunately, the South American farmers don't live up to their expected potential because of another year of La Nina, which we'll face in the U.S. here too. Next slide to show you some of the usual expectations involving this weather phenomena, which creates for South America hotter, drier conditions across most parts, and that would be something that spells trouble as we lead into this next season. Currency questions are always there for South America, and bigger again recently for Argentina, where they can have ample supply. Argentina, for example, the world's usually largest soy meal exporter, having trouble with a deflating in currency, inflation, a problem here that's making farmers in Argentina hold off their sales as a hedge against these runaway prices and the floundering currency. We'll keep an eye on that, along with how the US dollar performs, very important for our export potential against the competing currencies in the hands of these South American exporters like the Argentine peso and the Brazilian real. Farm tour updates are going to come here this winter. Check in with us at Comstock. We'll have Matthew Cruz, our president, back in Brazil. He's there every year. He spent a lot of time there managing a large farm and still has farming ties in Brazil, going on a tour here with farmers this winter and allowing us to have an update along the way. We'll keep in touch and see what's ahead for those Brazilian farmers, because it will absolutely have a huge impact on prices ahead. He'll tell us how conditions look under this expected La Nina condition, but for the U.S., our relationship to La Nina is such that we get cold weather from around the equator, right up next against South America, pushing up against our western coast. It adjusts the jet stream lower, and it ultimately is to blame for what we've seen in this hot, dry pattern for the Southwest. So going forward, this is the call now from meteorologists that we'll have a third year in a row of La Nina, potentially setting us up for a similarly concerning weather pattern leading into 2023. It's not just here in the U.S. that we've got weather issues, but it's around the world. There are these extremes popping up. We can see on this map the drought area in the southwest and western U.S., but down in South America, there's a red spot that represents Argentina, as we've been talking about, with their potentially extended drought into the next season. And then up into the northern hemisphere, again, most notably Europe, a lot of red there to indicate what they're seeing as their worst drought in more than 500 years. This comes into play in a big way when we look at possible European imports of soybeans, and also in a big way in the wheat market, where countries like France don't have the crop to put up, and we see as a result better demand potential down the road for U.S. exports. So the same could be similar with soybeans and soy products. Stories like in Spain, their olive crop, they're being the biggest olive oil producer in the world in Spain, now cut by at least 30% this year because of drought. So some extreme weather problems that I think will continue, unfortunately, to talk about even leading up into the spring 2023. The early idea is nationally we're going to have less corn, more soy. I think that should be the expectation for the West too. We'll have less corn on corn. We'll have more interest in building up that capacity as we get enthusiastic about what's ahead for soy processing plants that would be popping up in the north. We see that old crop basis incentives are going to likely carry into the spring. And so what we're observing now with the tail end of the season, higher values can eventually be the pattern for new crop. Futures can come up, and same with cash prices for new crop once we get out of the early gut slot part of this next harvest. So I mentioned more processing capacity coming online to help drive physical demand, but also speculative interest too from the bullish end. And we have at this point, when we fast forward to spring 2023, more known about the South American crop. And so that can come into play as we make these acreage decisions for next year. Generally, we expect that even with a big South American crop, we're going to have a soft landing here for export demand, and that we won't see a huge downturn from what we have enjoyed here recently, which we can see here in the red line being current accumulated net sales for soybeans out of the U.S. So exports here record high, much above last year's record and much above the 5-year average, with help again from China. Even with some recent cancelizations, they've stepped back in and have been a big purchaser. We'll count on that to continue into the U.S. new crop season as something that supports values generally up from the Gulf and over from the PNW, where we're shipping these soybeans out to China in a big way still. Again, something vulnerable to trade tensions and political drama, but underlying all this is still a need for grain around the world and short supplies outside of what's held in the U.S. What are your options about all this? And one, it's about considering the use of futures and options and how you need to possibly hedge. Before we're talking about hedging, we're just encouraging that you know your position. Of course, when you're having a crop that's ready to be harvested, if it's not priced, you're long those bushels and have upside opportunity in the market, but also downside exposure as well. So knowing that position, what you have, what you expect relative to what's already priced, what is the opportunity in terms of alternatives, that needs to be assessed next. I encourage everybody to get to know your contracting alternatives and what's available to you by your local buyers, and how you could also maybe supplement that in other ways. Again, potentially hedging, because as we're learning about the different types of contracts we might be able to use to adjust our position, whether it's to lock in the basis with a basis contract and leave the futures open, or whether it's to employ a futures only contract and wait for basis to firm. These are alternatives that could potentially come into play when we're thinking about how do we mitigate or manage risk against the worst case scenario. We're always talking about what we expect and positioning ourselves to benefit from that, but we're also keeping in mind what could be the alternative to our expected best case. And for marketing, that's really crucial in a time like this, where again, we're ultimately expecting higher prices, but also looking for higher volatility along the way. So seek advice and information. That's the sort of last marketing tip I can provide. And you're here doing that today, listening at Kansas Soybean Commission and Comstock Investments. Appreciate that and encourage you to continue to reach out for more. Comstock.com and information that I can provide you, I'd be glad. This has been the Soybean Marketing Outlook. Again, I'm Joe Camp. Thanks so much.